Want to buy a car without drowning yourself in debt, or a low interest rate on a home loan when you're planning the next step of your life? A good credit score is vital to achieving all this and much more, with consistent and responsible spending increasing your credit score gradually. While achieving good credit can take many years, there are a few steps you can take to give your score a boost. Here are 8 amazing hacks to boost your credit. Number 1, reduce your credit utilization ratio. Did you know that your credit utilization ratio makes up a massive 30% of your score? No wonder this is our first hack for improving credit score. Fast. If you don't know what this means, it's simply the amount of credit you're using divided by the total amount of credit you have access to. A general rule of thumb is to use up to a maximum of 30% of your credit card limit. Many experts even suggest keeping it below 10% if possible. And to help you achieve this, let's go over 3 super easy and quick ways to reduce your credit utilization ratio. Firstly, only charge essential purchases like gas and groceries on your credit card, as these items are the ones that'll earn you bonus points on your credit. Secondly, try to split your purchases between multiple credit cards. And last but not least, for large one-time purchases, make extra payments during the billing cycle. Number 2, make sure you spend to keep old accounts active. Are you holding on to an old credit card but no longer using it because the better rates and incentives on another one? You can actually end up with your credit card account being closed and causing a negative impact on your credit score. We know it sounds counterintuitive to spend more when you're looking to boost your score, but not using a credit card will usually lead it to fall into a dormant status. This will usually result in either extra fees, a decrease in credit limit, or account closure. A decrease in your limit will impact your credit utilization ratio, something which Ken just talked about earlier in this video. Closing an old credit card account can also hurt your score. If your old card charges an annual fee, see if you can downgrade it to one without an annual fee. In this way, you not only maintain your account history but also continue to strengthen your credit. To avoid all this hassle, simply make small purchases every month and reap the benefits of an active credit card. Number 3, sign up for a credit boost service. Having a credit card and installment loans are not the only ways to increase your score. Credit boost services like Experian Boost report your monthly bill payments like utilities or your cell phone plan to the credit bureaus, so you can receive credit just by linking your bank account. Not only this, but credit boost services allow you to include payments to other services usually not included in a credit report, like subscription services, phone bills, and other utility bills. So, pay for your Netflix and Hulu with even more ease and enjoy your favorite movie undisturbed. If you've built up a good payment history with service providers like these, then a credit boost service can help give you good points almost instantly. Number 4, request credit limit increases. Another tip is to periodically request an increase to your credit limit. Every credit card company has a different process, but it's typically very easy and very quick. Most credit card companies will even have a procedure to let you do this online. By increasing your credit limit, you lower your credit utilization. However, there are 2 things you should keep in mind when doing this. First, don't request an increase on a new card, as many companies will not increase your limit if it's a new card. Next, when you request an increase, you want to make sure you do it in a way that doesn't require a hard inquiry on your credit report. If you request a relatively small increase, the company will usually approve it automatically. If you ever request an increase and the company wants to ask you for more information, smart thing to do would be to decline the request. You don't need the increase, and so it doesn't make sense to take the credit score decrease from a hard inquiry. You can usually request an increase every 6 months, but be sure to check with your credit card user if the request results in a soft or hard inquiry. Soft inquiry does not affect your credit score, but a hard inquiry does. Number 5, fix credit report errors. Potential errors on your credit report can cause your credit scores to be lower than they should be, which can affect your chances of getting a loan or credit card and how much interest you pay. Sometimes banks make reports errors that hurt your credit score. Disputing credit report errors and getting those negative items removed can be a quick route to a better score. This brings us to the next hack, which is a periodic credit report review. Even if you haven't missed a payment, reviewing your credit report is free and only takes a few minutes. If you find an error, you'll need to file a dispute with the credit bureau. No error is too small to dispute. If the error affected your score, you should see a pretty quick change once the credit bureau corrects the error. There's no cost to dispute credit report errors, and you can dispute as many items as you like. Some common errors can be wrong account numbers or accounts that aren't yours, unauthorized accounts, false addresses, etc. Through April 2022, they're entitled to free weekly credit reports from the three major credit reporting bureaus: Experian, Equifax, and TransUnion. So be sure to check your credit card reports now. Number 6, become an authorized user. The next hack in boosting credit is fairly simple. Having a family member with a higher credit score, here's how this works. They add you to their credit card as an authorized user, and your financial history gets reflected on your credit report. Doing so can positively affect your credit score when the card has a long account history, on-time payments, and a low credit utilization ratio. Additionally, being an authorized user on someone else's credit card can also greatly increase your credit score while giving you none of the payment responsibilities. This piggybacking method allows the user to essentially add the good payment history attached to the primary cardholder to their own. However, it's also important to remember that while you are taking on the good history of the primary cardholder, you're also taking on any negative history as well. Before making a decision, be sure to take into account the primary cardholder's own financial habits and whether this commitment will bring you long-term benefits. Number 7, make on-time payments. While it sounds obvious that your score relies heavily on bill payment, a late payment can actually have a massive negative impact on your score. Your payment history actually accounts for a massive 35% of your score. If you have a history of late payments, the first and best way to raise your credit score is to start building a record of paying on time. Automating your monthly payments is an easy way to make sure you keep your accounts in good standing and avoid late fees as well. You can also use applications that act as a monthly bill calendar to help manage deadlines and payments. This may require some time and effort, but the payoff is sure to be worth the hassle. So you can make sure you're planning your finances accordingly and are staying far away from any additional charges. Number 8, have a variety of credit accounts. While you should only borrow money when absolutely necessary, having a variety of credit accounts can demonstrate on credit bureaus that you can manage credit responsibly. Each type of account can benefit your credit score differently. Loans that you repay in full can remain on your credit report for up to 10 years. This not only makes your credit report look good, but you also have an easier time qualifying for a similar loan in the future. So in addition to using your credit card, having a mortgage or auto loan can actually increase your score because loans are considered a different type of debt. So if you're thinking of buying a big ticket item like a car with cash, consider if a loan option may be a more beneficial option for you. Many car dealers even offer various discounts when you finance through them. If you have the cash in hand, simply stick it into a high-yield savings account and set up an automatic payment schedule out of that account. Not only will this mix up your credit lines, but it'll reduce your credit utilization ratio as well. So make sure to use this tip as you'll get to the discount, earn some interest, and boost your credit score all at once. And that's a wrap for this video. Make sure to try them out and let us know what works for you by commenting down below. Thanks for watching.